Good morning, everyone. Good morning, team. Good to see you. Welcome to another Wealth Coffee Chat. Morning, Facebook user, whoever you are. You're probably behind the Facebook veil of a private group, but welcome. Good to see you, Luke, Graham, Deb, Scott. You got a bit of rain up there in air, mate. There you go. Interesting. Sharon, tell you a quick interesting story. Many years ago, I was born and grew up in North Queensland, born in Charters Towers, moved out to Pentland, which was further west on the way to Mount Isa, moved back to Charters Towers, spent a bit of time in Townsville anyway, and then I left when I could get out of Dodge as quick as I could when I realised the world was bigger than those places. But hey, listen, Air, a little story of Air many years ago, many years ago, in the early 2000s when we started Positive Real Estate. We discovered Air as a cash flow town many years ago. This was probably 2004, 2005. And Scott, we sent emails to about 30,000 investors about a couple of properties we'd found for our clients in Air. We used to be a buyer's agent back in the day. These days we're an investment agency, so a little bit different but the same. We sent email out to about 30,000 investors saying, hey, we found these cash flow properties in Air. It's a great town. And we blew Air up. That town doubled in value in about 4 months. There you go. Back in the day. What's that called on the stock market? That's called insider trading, manipulating the marketplace. But in real estate, that's just, letting the market do its thing. Anyway, little funny anecdote about Air. Mate, I hope you stay well and safe up there. If it's too rainy, it can get bloody wet fast. The Burdekin River can come down hard up your way. So there you go. Hello, Renee. Cool. Great. That's awesome. Megan's an awesome coach. You're in great hands there, Renee. Well done. Hey, listen, folks, let's get into it today. I thought we might have a little talk about Melbourne. What's the go with Melbourne? Tell me in the chat, what are your thoughts, your pros and cons about Melbourne right now? It's one of Australia's biggest cities. But for you, tell me, right now, just, getting the feel of the marketplace, what's your version of Melbourne? Because my version of Melbourne's pretty bullish. I think Melbourne's got a huge future in everyone's portfolio. But how do you guys see the Melbourne marketplace right now? And I've got a bit of stats. I'm going to have a little look at Melbourne and Brisbane. I've got some pretty cool stats. Nigel, boom, bought in Canterbury. Hey, that's awesome, Nigel. Yep. Pros, lots of people. Cons, lots of people. It's probably a good place to own a investment, Alison, but you might not want to live there as we go. But listen, Sam talks about this all the time. In Australia, we have two, rather large cities that, are just powerhouses of our economy. That is Sydney and Melbourne. Then we've got what he would call, new cities, which are sort of Brisbane and Perth, and then, you got your baby cities, the ones that are trying hard, but not really cities, places like Canberra. Adelaide's a city. I'm going to give you guys a bit of cheek. But, they're not as massive as those other places. So owning a piece of real estate in places like Melbourne right now in comparison to somewhere like Sydney, from a price point of view, is pretty cost effective. And let's have a little talk about what that looks like this morning. So, because our supply chain team, and I'm going to drive it with supply this morning. Remember, what are the sort of the main factors for us here when it comes to the supply of real estate or pressures in a marketplace when it comes to, I think I've got, it's this one here. Yep, there we go. So, what are the main, get that right. What are the main big 6 key drivers when it comes to growth and value in a piece of real estate in a marketplace? And we look, There's lots of minutiae after these main six, but if you look at the marketplace when we come to, all right, what's the one that's most influential? Right now we're being exposed. Oh, let me put that down a little bit. Right now we're being exposed. Let's see if I can fit that into the page. There you go. Right now we're being exposed to some market movement or some market influence by the interest rates. The world of banks and institutions mucking around with the cost of money. Cost of money at the moment is going up. The next one is supply and demand. I'm going to talk about that one today, certainly when it comes in relation to Melbourne. Supply and demand. The idea that if there's low supply, high demand, if we've got access to money, things will move, and we'll talk about what that looks like. Jobs and employment, employment and jobs right now, that is very positive for a lot of people. We're talking about, infrastructure, the spending. And if you look at Melbourne, the spending for Melbourne is significant. I might try and find that in a second, actually. I'll show you guys something in that space. We're talking about the politics, it's fairly stable. It's not, people aren't sort of waving flags and sticks around when it comes to messing with our investment vehicle as we go. And we're talking about sort of, demographics / population, all right, population. So we're going to talk about that today, but you have a look at these ones, probably the ones that I'm going to sort of dine out on today, which is supply and demand in Melbourne and the demographics and the population, because, it's pretty interesting when it comes to this, and I'm going to sort of zoom back up to the top here to have a look at what's going on. But, let's have a look at, a general bit of an overview of the marketplace in Melbourne. It was charging along fairly nicely. If we have a look at the sort of the migration and the population growth, which was driving, a lot of Melbourne for, a fair chunk prior to the COVID times, that was pretty positive, folks. But, when, we've all seen the COVID dip, across many areas and many states. Tell me right now, which state grew in COVID times by 50,000 people in population? Which state grew in chuck that in the chat for me. But Melbourne, check this stuff out. This is the medium density supply chain, folks. Medium density, which means townhouses and apartments from the inner city all the way to the outer ring. This is Charter Kramer. They do some great research for us. Yeah, Queensland, that's it. That's it, Team Queensland. So, our pick right now for two different reasons. Queensland has got more momentum, more population, a rosier picture. Melbourne is the underdog right now. It's actually really undervalued, super undervalued for the size of the city and what's going to happen with its rent and its population coming soon. So that's our sort of kind of pick, but today we're dining out of Melbourne, right? So check out the vacancy rate. It's actually down a little bit lower now. It's actually down at 1.2. I got from the other day. That was July. Now, the median rent is up, collectively 19 plus. It's up sort of 24%, okay, from, 2020, which is fantastic, up 24%. The vacancy rate down very low, on its way to being under 1%. You wait till we get some population moving into Melbourne and, away we go. So, what's going on with our supply and demand down there in Melbourne? Where are our pieces of real estate being supplied? Which sort of marketplace? If you have a little sticky pick at this is quite good. I like this stuff when you're having a look at, what projects are going where, and the number of properties being completed and the number of apartments being completed. So the interesting thing, and you'll see a little chart in a minute, and so the interesting thing is not everything that goes up for approval, not every property that gets up for launch or whatever it is goes through to completion or even starting a project. And what's happening right now, folks, certainly across many markets in Australia, is that the little bit of the uncertainty when it comes to finance right now. So finance right now is not only affecting the buyers. People are sort of, the average person is sitting on their hands right now, doesn't realize how much of a good buying opportunity it is, but it's also affecting the supply chain, which was already affected prior to COVID. You guys have heard me talk about this. 2018, the APRA bullshit absolutely poleaxed the supply chain, and it continued to be worse. Now, it was APRA started the decline, right? APRA started the decline. Then COVID came along and actually made it worse. And now the interest rates going up are making the supply of new real estate worse. And we are headed for a disaster. And you can hear murmurs of state legislation about restricting rental rises right now. They're scrambling behind the scenes trying to make some things happen. The government needs to take responsibility for that, and they're going to try and, wiggle out of it. But anyway, that's a chat for another day. Hey, morning, Kevin, all the way from Florida. Good to see you, mate. David, good to see you. Listen, as you would expect, there would be more apartments and medium density things created or, completed in the inner city ring. So, if you have a look at sort of that, bandwidth there, and when you look, into the city and outside, you can see the differences, when it comes to that's probably, all apartment area, and sort of out here would be sort of townhouses and, random apartments every now and then. So you can see the supply is different between, certain locations, which is interesting. Yeah, it's interesting, Alison. Politics is such a funny beast, right? You vote in maybe the Greens because, you like their environmental policies or, whatever it is, and this is not a chip at how anyone votes. I certainly, entertained, some alternative voting this year. But then you end up, they're extreme on one end because you want them to fix the environment. Then they're going to, take some pretty average approaches to, entrepreneurialism and finances and stuff like that. Anyway, it's a hard gig. I wouldn't bloody do it. But you guys know we talk about all the time. Politics is our number one risk in creating our wealth. Number one risk. The pollies are the maniacs. They're the number one wealth eroders in this country when it comes to individuals, right? So if you have a look at this team, over 2021, 22, apartments launched, the gross number of apartments to apartments completed. The time frame from a launch, so a property being approved, so I want to build some apartments there, and being completed. Tell me in the chat, how long do you think, like the time frame from, launch, commencing, and completion would take? Tell me that. Tell me that in the chat, because this is really important to understand when it comes to the supply chain and where we sit right now, and why Sam and I are so bullish when it comes to a number of these marketplaces, especially the ones we can afford to buy in, right? And especially the ones that make sense, and especially the ones that are going to receive huge amounts of jobs and or population. Yeah, absolutely, 2 to 5 years. Margaret, I think 18 months is a little keen, but even if we say launch, and we're talking about the development approval, you're talking at least 3 to 5 years, folks. 3 to 5 years. And at the moment, because of some supply constraints with construction material and some jobs, right, and some job issues, folks, I am going to tell you right now, I think this is going to push out between 4 and 6 years. The supply problem we have right now in Australia, especially on the East Coast, is not going to normalise for at least 5 years, probably maybe even a decade. That's my big call right now. And if you're listening in, like, you're worried about the property market because, some twit, on, 60 Minutes read some stupid article from the bank, which is self-serving anyway, and trying to terrify you into locking your interest rates in and all this bullshit. The real story in our property market right now is the government has absolutely clustered this up, right? And our supply chain, the supply of residential real estate is in absolute all sorts right now, all sorts. How can we end up where we are right now? Check this out. A 76% decrease, 76% decrease in an already undersupplied market. How do we end up here, folks? And this is what you need to pay attention to. Yes, the interest rates are going up. Manage your cash flow. Now, that's 101. Don't buy something you can't afford to buy. Don't buy something that's too negative. Cash flow, make sure you do your PAYG variations, blah, 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 et cetera, et cetera, et cetera. However, there are forces afoot that the government cannot get back on track, and it's only the free market. The free market, which means you and me, as investors buying properties, are going to bring supply to the marketplace right now, or enough supply anyway. Have a look at the amount of properties we have fallen from, all right? So if you have a little look at sort of, the peak sort of 2015 to 2018, probably 2017, right? This kind of peak period here for Melbourne, right? That kind of peak period, have a look at the fall. It is dramatic, folks. Dramatic. Absolutely dramatic. We are in absolute all sorts when it comes to this. And have a look at the launch. So these are the commencements. These are projects starting, and these are launches. So, even, the launches from 6,500 in 2021, now down to 4,100. That's another 30% drop in 1 year, okay, for apartments, launches, projects being started. I'm predicting that's going to get worse, and then obviously that'll get worse. That's what's going to happen in the Melbourne marketplace. And if you have a little look at, our supply chain in another way, or completions are heading that way as well. So, pretty interesting when it comes to the world of this market, folks. And there's going to be, some big issues, pronounced shortage, blah, blah, blah. What does it look like into the future? Here's what, the future of completions are with the construction cycle already underway, and they may have already been going 2 or 3 or 4 years. I can tell you right now, here's what I can tell you. See these completions right now. See these completions in 23 and 24 and 25. Tell me, folks, is that new properties coming to market? So when you see these completions, right, let's say things that are going to complete in 23, financial year 23, are those completions, is that new properties being brought to market? Well, tell me what you see here. And it's kind of a trick question. I'm not giving it away, but maybe I'll have a sip of my coffee and I'll see if anyone picks it up. You go, oh, there's plenty of completions going on. All right. Tell me what you see here about these completions. I'll fill it in. They're fake. Yep, they're new properties to market, Graham. However, I would say, a large chunk of these, they're off the plan market, yes. A large chunk of these will be driven and they will be owner-occupiers, okay? Why would they be owner-occupiers down there in Melbourne, a large chunk of these? Tell me that in the chat. And these are already accounted for. They're already purchased. They're not new properties. This is not new supply. This is already existing supply. Is everyone listening? Right. So these are coming to market, but they're coming to rent, right? Which is down from 30,000, right? But a lot of these are going to be owner occupier, and why? Because of the great giveaway of free money by the governments of recent times in the COVID stimulus. They gave away money. Basically, everyone who was smart enough to get a piece of that action almost ended up with a free property if you could buy the right priced property. Okay, you couldn't buy houses very well in many of those markets. Absolutely, Chris. Good pickup. Yeah, and any properties with a triple O postcode in any state, in any city or capital city, stay away from. They're rubbish. The lenders hate them. They unless you're buying, $40 million penthouses that overlook the Sydney Harbour Bridge and stuff like that. Your regular rentals in the AAA postcodes are rubbish. Lenders hate them. LMI hates them. They're terrible. So stay away from them, okay? So let's have a look at the takeaways we've got here, right? Like Melbourne, the median house price compared to the median apartment price, well over 300, close to $350,000 worth of difference in that price. That's why I'm quite bullish about the apartment market down in Melbourne. And if you look at the population, populations projections, Melbourne will become Australia's biggest city. Now, how can Melbourne be 30 to 40% cheaper than Sydney, folks, and be its biggest city? Tell me what's going on there, right? So, a couple of cons for Melbourne, as at the moment, the rents are a little bit lower in yield, but that will not stay that way for long. The rent boom is coming, and I would be purchasing now if you are in the marketplace and you want a piece of Melbourne and you don't have one now before the rents take off, right? Who would sell their property when the rents go up $200 or $300? It's lunacy. I'd be sitting on that sucker forever and a day, right? That's your challenge right now. And what is coming? A population boom, folks. A massive population boom coming in that way as you go. Brendan, block size is an certainly as a part of your portfolio, Brendan. You want a piece, you want to mix up your portfolio and have some land in there for sure. And have a listen to a few of the Wealth Coffee chats I've chatted about before. Land is not the be all and end all. Certainly, larger blocks of land. Oh, you're talking about block size. Okay. It's actually, Brendan. You know what? It's actually the other way around, mate. We've been doing this for 25 years actually, and we find the blocks of between sort of 60 and 120 apartments are very well maintained because they've got enough apartments in there to have have enough money in the kitty. Okay, couple of things, and this is where people sort of it's probably a bit long today, Brendan, but let me. I misinterpreted your thing there, Brendan. But yeah, block size units. What we find, two things. The quality of the properties. So don't buy in an apartment block if it's really low quality apartments. Absolute disaster. It'll be a slum shithole forever and a day. It'll never change. Okay. So and I don't like the bottom end of town from my wealth anyway. Like I don't like buying in low socioeconomic areas. You're buying middle. You're buying middle to bottom end of high when it comes to quality. So buy in really good quality apartment blocks. No, don't buy the cheapest. Buy the best value. And what you want to do, Brendan, is you want to be buying in neighborhoods, whether it's land or apartments, where the majority of those properties are attractive to owner-occupiers. Now, I'll give you an example. Now, we work with a bunch of providers who build amazing things. Like, let's say there's one in Brisbane called Aria. Now, nearly every single property at day one is purchased by an investor. So 100 properties purchased by an investor. Some people say, oh, that's a disaster. Well, when you say that, you don't know what you're talking about. Like there's so many things to consider. We have had thousands, and I mean thousands and thousands of investors make amazing money by buying the right thing at the right time and the right way. Aria, perfect example. 100 apartments. Within 5 years, a lot of people have sold them, not the PRE clients. A lot of people have sold them on to owner-occupiers, and owner-occupiers are paying premiums to get into those properties. So maybe I'll do a little bit of a Wealth Coffee chat on that one. But good question, Brendan. There's a little bit more to consider, certainly, when it comes to buying apartments than when it comes to buying houses. But for me, I'm actually in the world of like I'm actually weighted at about 65% in my portfolio of medium density. So because I like the income play, I like furnishing and I like Airbnb because that's a nice little play for my portfolio. But there you go. Okay. Anyway, I'll move on. Yeah, absolutely. Jump in. Brendan, jump in and have a listen to Sam's stuff. He breaks it down amazingly for sure. Yep. Alison, thanks for that shout out. Yeah, it could, Gary. Listen, I don't think it'll flow back to Sydney, Gary. I think you're right. I think it'll go to places like Queensland. South Australia is attractive because of its price point. Certainly, I think it'll go to where prices are better and jobs are okay, Gary. Like that's what we see often. But it's an interesting one, isn't it? Melbourne, there's people coming, folks. There's a massive population boom coming. And we might talk about that in coming days as well. Anyway, I'm 10 minutes over today. So thanks for hanging out. We're on the Wealth Coffee Chat, folks. We might call it quits there. And a few great questions. Thanks, Gary. Thanks, Brendan. Thanks, Alison. Thanks to all of you guys joining us today. Hopefully our Wealth Coffee Chats are useful. You guys stay well, stay awesome. And tomorrow we'll do the same breakdown on Brisbane. Don't miss it. It'll be an awesome one. There you go. All right, folks. Take care. Bye for now.